Good to see so many people still around. It's always a bit difficult towards the end of day two. My name is Gareth Jenkinson. I've been working for Cointelegraph as a reporter since 2017, full-time for over a year now, a broadcaster from South Africa. So if you're wondering where that accent is from, that is where it's from. And I've really been looking forward to this panel. Obviously, the wider cryptocurrency space has been in a bear market for a good couple of years now, since the Bitcoin last hit $67,000 back in 2021. It's been a little bit downhill from there. Obviously, token prices have been depressed. We've seen some major collapses in the space. Luna Terra midway through last year, and then obviously FTX towards the end of last year. And we've seen major crypto lenders fold. We've seen companies decreasing their workforces, downscaling massively, and it's really been tough for the wider industry in general. And on stage with me are people investing in cryptocurrency projects and companies. So they're really at the coalface when it comes to deciding who gets the money and who's building interesting projects. And for me, it's massively interesting just to hear how they've been approaching it over the last 2 years, because of course, if you've been in the cryptocurrency space, it has been difficult. So I'm going to start from my immediate left with Natalie. I'm going to let you guys introduce yourselves, the companies you represent, and a little bit more about that.
I'll turn it on and then it'll work. Hi, everyone. My name's Natalie Eastman. I'm with Outlier Ventures. We are an accelerator. So we take Web3 companies, only Web3 companies, and we put them through our acceleration, which means that we will help them to do 18 months of work in just 3 months. And right now, in this down market, we really believe that builders will build. And we've now become the #1 investor this year in Web3 companies with over 100 investments in a portfolio that's reaching 300 Web3 companies. So really excited about the space and not at all scared about the bear market.
I'm so bored of talking about the bear market. Can we not talk about the bear market?
Another 50 minutes, that's it.
That's it, just a little bit more. By the way, I feel like you felt yesterday now.
Welcome to my world.
Bit ropey, if I'm being honest. Hi everybody, good afternoon. I actually do appreciate there being a lot of people here at the end of the second day. So I'm CEO of Deus X Capital. We're a $1 billion fund. We have private equity investments. We have venture capital investments. We are a venture builder. So somewhat different to Natalie's model. Like, we're going to be very focused on building 1 to 3 businesses a year from scratch, and then strategically figuring out what to do with them. And then we're an allocator to funds as well. So we have a pretty broad purview. Our specialty really is in fintech, digital assets, blockchain, and now AI, not just because it's cool, because we know.
I wore a shirt today because I always sit next to Tim and he looks too fresh for me. So I'm trying something different today because I knew I'd sit next to him again. My name's Alex, and again, thank you for coming out. We'll probably, if you guys were here yesterday, Tim and I don't know how well prepared you are, but we'll probably cover some points. Some points we talked about yesterday. Yesterday we talked about, are we still investing in Web3? And the short answer to that 30-minute panel is yes. But now you're up to speed to continue this today. So my name's Alex. I'm the founder of Angel Block. I think I'm going to provide a slightly different perspective, since everybody here is more of an institutional investor. What Angel Block does is a non-custodial fundraising protocol. So we're a DeFi protocol. We're connecting investors and startups and doing the whole shebang on-chain with milestones. So hopefully the 2017 ICO boom doesn't repeat, where people raise hundreds of millions of dollars and 5 years later, 6 years later, there's no product or service to show for it. I'm a small fish when it comes to investing compared to my co-panelists. I'm LP in 2 funds, and I'm a more avid angel investor, so I probably do 5 to 10 checks a year, something like that, and smaller.
Hi. Thank you for having us. My name is Ignacio Fons. I'm a managing partner at InverReady. We're a general asset manager not the stress in the world general. We do things very broad, from seed capital in digital, the digital economy, all the way to private equity. And so our approach to blockchain is comes from that angle, no? One of a generalist kind of investor. So very looking forward discussing about the bear market and stuff.
Yaroslav.
Hi everyone. I'm doubling down on being amazed and having this backed at this time of the day or the second day. My name is Yaroslav. I'm from Yaroslav, which is a Web3 focused venture studio and accelerator. As a venture studio, we build projects from scratch with our in-house product teams, and then see if they fail or succeed. If they go through the validation stage, they raise the seed round. We help them grow as separate companies. We have also launched an accelerator this year to increase our pipeline and access to teams and projects in Web3, because we're raising our seed fund. Bear market is like the words that we have heard too much this year. This week, everyone is a bit on the positive note, given what is happening. Let's hope this stuff continues. But still, let's discuss what we can do if it doesn't.
Yeah, we'll definitely take it from there. I know you guys are very tired of talking about the bear market, but as a journalist looking into the space, it's very interesting for me because a lot of people make their fortunes in a bear market, right? That's when your investments pay off because things might be worth a lot less than they should be. So my first question to you is, and maybe we'll try and keep it as brief as we can in our answers, just so we can give everyone a good chance to share their thoughts, is, has this been good or bad for your firms, in particular, these 2 years of bear market that we've been through? And do you see the investments that you've made paying off in the next 2 to 3 years? Yeah, we can go down. I see. Yeah, Tim, you take it first because you got 1 billion in your war chest, and
Yes.
Is it paying off?
Well, actually, we don't. Just to be clear, I get asked that we don't have 1 billion of like fresh capital. We've got quite a lot of it already deployed, but we do have capital. So I sort of have a slightly different view, I suppose, because I've just taken the job, and as far as I'm concerned, this could be one of the best job moves ever in terms of timing, right? Like the opportunity set is now. I was saying on the other panel earlier, like the really high level, take a step back, smart way of looking at it is you sell into a bull market and you buy in a bear market. Like that actually is really what you should be doing. Like you should not have been buying in September of 2021, right? We can all agree with that. So, i.e., you should be buying now. So to me, this bear market has shaken out a bunch of useless stuff, really raised the bar on quality and the need to see real traction. Whereas, you know, we all saw the stuff that people were investing in a couple of years ago. It was like, well, that's never going to be a business. So it's a sort of a level of healthy rationality that I think has come out of this bear market, but also the fact that the institutional adoption has continued underlying it. I think this is a really exciting moment. Like I'm not calling the end of the bear market. And if there's any press out there, don't write this. That's not what I'm saying. But
I'll switch my record off.
Yeah, this is off the record. Well, obviously on the record, but like I'm not looking at it like a bear market anymore. I'm looking at it as like what are we going to do to make sure that when the bull market comes, we're really well positioned to take advantage and leverage up? Because I absolutely agree with you. This is where fortunes are won and lost.
Yeah, we have a bit of a different. I mean, I agree. I'm going to be boring. I agree with Tim, but my perspective is a bit different, and I'd like to kind of leverage that during this panel because we've raised in a bear market. So the majority of our seed was raised last year. And we've continued to build throughout the bear market. And yesterday we talked about a bit during that panel about, you know, VCs flip-flopping, and now you have this new shiny thing called AI, and you have some VCs that are saying, oh no, Web3 is dead, let's go to AI. And in 6 months' time, they're going to say, no, AI is too crowded, they're going to go back to crypto. But you see a lot of this flip-flopping, and we also talked about the fact that you do have builders that only want to build in a bull, and you have VCs that only want to invest in a bull. And those are obviously the people you want to stay away from, but we've been seeing a lot of that in the last 2 years. So basically the tourists that come into crypto always get washed out in a bear market. But a bear market, when it comes to building, I think it's really interesting if you play your cards right. I don't think a bear market is when you should deploy crazy capital to do marketing, and let's differentiate community building and like actually going after a user base. It doesn't have to be, 100,000 per month campaign on Twitter or whatever. But I think a bear market is amazing to really solidify your product, focus on things like UI, UX, which in crypto has been a huge problem for the last, since inception. Like we've had amazingly huge UX, UI problems. So that's kind of what we've been doing at Angel Block over the last year specifically. We cut down, this is the third panel I'm doing this year because we're just heads down working. We know the market is going to turn, and basically we want our team and we want our product to be as highly optimized as possible to actually do what we're here to do in a bull run. But it doesn't mean we stopped working. It doesn't mean we stopped doing raises or working with startups or talking to investors. We've never stopped that. But our priorities have shifted, and we really want to double down on the product when things are slow. And I think it's a good approach to have.
Okay, so maybe a bit contrarian. I'm not going to say that a bear market is good. I think it's somehow worrisome, not because the impact of the prices of crypto, because we never invested in crypto, but mostly because what we see is that the ecosystem is not evolving at the speed that we were all expecting. We've made investments in exchanges, avatars, NFTs, and DeFi, and in all those, which were mostly B2C theses, there was a predicament, no? That a lot of people will be onboarded into Web 3.0, and those businesses, which are doing fairly well, we're very happy with our investments, but they could be doing much better if the onboarding of the general public into Web 3.0 would be at the stage we thought it would be a couple of years ago. So there is I would say the big tax that the overall Web3 ecosystem is paying, the big tax that we're paying for this bear market is the fact that the general public is not onboarding, and therefore the technology is lacking its potential. That's what we should be looking at. Not so much whether the blockchain Bitcoin goes to 50,000, but whether we get a billion more customers in. That's what we should be looking at.
Just to add, to double down on that idea of the general public being tired of the bear market, but also some builders quit because like this bear market is quite long this time, and a lot of good teams, good founders, not the tourists that have been mentioned, a lot of them of course been washed away, but there are a lot of teams that didn't manage to raise enough money when they could, or didn't want to raise more money than they needed. And being in the situation where you really struggle to raise money, these days raising even like a few $100K is a challenge for projects. And with it being very difficult, and at the same time being constantly, fudded, criticized, whatever you do, this pressure, I'm witnessing a lot of teams quitting. We're tired. This market is too difficult for us. And I think this is something that Web3 loses in this market, because last year and the year before that, we've seen a lot of good teams coming from traditional IT to join Web3. And now they're like, oh no, we're going to do this classic stuff. So I think there is some toll on the market from the bear side.
Can I ask a question? Is that allowed?
Of course. Yes.
Wait, can I answer the question?
Yeah, I just wanted to know, like, if you can answer this question though, if you like. But I just wanted. Do you think that's because they've never seen a bull bear cycle? So if they're coming from Web 2 and into Web 3 and burning out, is that strictly because they don't know that it's about to get better? Like there will come a time when it's better?
A short answer to this is that because this industry is so immature, the level of hate, FUD, and criticism is also immature. And like a lot of people from classic IT, they just don't used to this piles of shit around them. And then they're just, wow,
Sorry for that. It was
No, actually,
confused me.
It was a good question because really 2008 was the last time there was a real crisis that's equal to this, and I don't know if everybody on the panel was there for that. But anyways, what I wanted to add is what we've seen is professionalism, right? Beginning of 2022, I don't even think Web3 was the media term. It was just starting. And now Web3 is the term that we're using. What we're seeing at Outlier is that the companies, Web2 companies, now that we have the term for it, are coming to us and they want to play around in this sandbox. So actually, those Web2 companies that have been through these cycles are saying, hey, now is the time where we can learn for much less than before. So we're partnering with a lot of big brand names actually who are saying we want a cohort of our own so that we can try things out. So that's what I've seen in this, and that's really positive.
As an accelerator, maybe you can just touch on how difficult it is for some of the companies that you're working with to build through these past 2 years. Has it been as tough as years before?
It's tougher than years before, right? Before you got money easily and people were tripping over themselves. What we tell our companies, please just build a product that's working, product market fit. I mean, it sounds, repetitive. Get traction. And if you can bootstrap a bit longer, because it is going to be hard to get investment when you come out of our accelerator. We're going to do everything we can to help you, but make sure you're sustaining yourself and do things to sustain yourself. And I'm seeing so much creativity with what they're doing. And we do have a low closure rate, actually. Not as many companies as you might think in our 300 portfolio have shut down. So.
I want to throw this over to you with Angel Block. You guys are using blockchain technology to essentially allow people to invest in Web3 companies. So
don't make me sound like a financial advisor, though.
No. That's not what I'm insinuating. But you are essentially one of these blockchain companies that has had to build in the bear market yourself, right? Creating infrastructure for other people to invest. Was that difficult for you to put your head down? I mean, like you said, the last year you've focused more on building than doing any marketing or anything like that.
Especially when it comes to raising, it was not to talk too much about Angel Block, but it was difficult because we don't really fit a specific narrative, and we kind of went in depth on narratives and what 2024 can have in store when it comes to investments. But we don't really fit a specific narrative. This is Angel Block is a passion project of mine. I've seen 7-figure returns on some investments, personal investments that I basically got dumped on by team allocations that I had no clue, and it turned out that was the case like a year later, right? So again, we talked about ICO boom 2017. I'm very tired of the BS in this market, and I've been in this market since 2015. I've been involved full time since 2017. So I've seen a lot of these cycles. I've seen a lot of this BS. And I think this kind of hits the point that Ignacio was saying earlier, where it's like, why, I thought we'd be further along. Why are we still dealing with the same problems? And I think Angel Block is kind of an answer to that. We just want more transparency. Bear market, a lot of these launch pads, which we don't call ourselves that. Our MO is totally different, but you have something as predatory as, in my opinion, launchpads are, which don't do anything in bear markets. They spin up, sometimes it's the same founders with a new project, spin up during a bull run, and then dump on unsuspecting retail investors, to the point where I was doing a deep dive on one launchpad, and what they actually do is, and if it's centralized, it's often is just a black box. Like, what they show you on their front end, you need to take it at face value, because if it's not on chain, it's very hard to verify. And I remember one raise that I was doing a deep dive on that this, let's call it Launchpad XYZ, had, and it was, they supposedly raised $1.5 million for a project I've never heard of, which that in itself is kind of weird. And it was across 34,000 participants. And coincidentally, it was this 2 weeks after FTX blew up. which is kind of weird. That wasn't a really good, investing sentiment in November of last year. The project launches, and they currently have 559 holders on chain. And you can check charts. There was never more than 1,000. So there's a lot of sketchy stuff like that. When it comes to just building, I kind of agree with some of the things that Yaroslav said regarding, teams being burnt out, because you're kind of waiting for this influx of capital come in, and you're wondering when is it going to happen, right? But I think if you're building and you're achieving some kind of product market fit, like if you do have some users, like 10 users is still users. People in this market, they think if you don't do a 20x upon launch, then you're a failure. That's not the case. If you have some users and you're building for those users, I think you're going to do very well. I think when we always enter bull markets, 10 users turns into 1,000 or 10,000 users. And I think that if you haven't seen these cycles before, it's very hard to imagine like how fast and how quick things become in terms of growth during bull markets. And being in this space for this many years, it's sometimes even I forget. Like I do get burnt out during some bear markets because 2 years in our industry is like a decade or 2 decades in most Web2 industries, and I truly believe that.
I'm going to turn this towards how you've approached investing over the last 2 years, because obviously you're all pretty discerning when it comes to putting your money where it's going to work. Ignacio, maybe we can start with you first, just in terms of how you described your firm as a generalist approach. Have you looked at exchanges? Have you looked at infrastructure providers? What has been the focus of your investing when things have been looking bleak?
Yeah. First of all, we decided what we didn't want to invest in, which was mainly anything which looked speculative, like crypto. So that left us with things that we would match the narrative, of the decentralized ledger is going to disrupt industries. So we invested from that approach. What new business opportunities will this technology bring? And that's where we wanted to put mostly our money, And this led us into things like we would like to have invested, which we haven't, into digitalization of assets. We've invested in NFTs that had a promise to change the way the advertising world would work, or we would invest in avatars that can change the way identity happens, or avatars that change the gaming experience, things of that nature. In summary, the reinvention of existing industries.
Yaroslav?
Well, let's say our investment strategy and sentiment really changed during the last year, not the two, but the last year. And this is something that I've heard from many fellow VCs, not the bigger one, but the smaller ones, is that you should be really considerate about deploying the remaining capital you've got. So we've actually, what we've done is that we have identified the portfolio projects which we thought and still think have the largest chances to survive. And then we just preserve the capital to help them live as long as possible, as it might be needed until the market sentiment changes. So that's our current focus. It's just we made some bets, and now we're focused on letting them breathe and live as long as possible.
Guarding those investments. Tim, you said that you guys have been focused on, identifying a potential project, starting it from the bottom up and building it and then letting it do its thing. Has that been the case over the last 2 years, and what has worked for you so far?
Well, we've got, I love that venture building kind of concept, because one important thing about us is that we're operators as well as investors. We have operating businesses that we own 100% of. Therefore, we are also at the coalface, also dealing with the challenges that some of our investments deal with. And I think there's value in that for us in our particular area. So that makes us active in a very particular way when we engage. But also, if we're also starting stuff from scratch and investing in all of it and owning it that 0 to 1 moment, I think that also gives us a different perspective on what the same people, at the same stage you're trying to do, right? So that was always the concept of Deus X, which is we've got all the way from PE all the way to doing it ourselves, and we're investing and operating. But I think that, and I apologize to some of you who heard this on a previous panel, but like my rubric, I think what I said yesterday is my career is made of trying to sound clever, but I'm not that clever, so I have to come up with simple rubrics to help me remember stuff. And my simple rubric for investing is people, commercial, and structure. And so in that order. So if the people aren't the right energy, if the deal atmospherics don't feel right, if I don't trust them, if they don't seem to align with our values, then I will not go further. There's no point talking about your business. There's no point, no matter how the valuation might look, I just am not going to invest if I don't like and engage with and really respect the people. I think that's really, really important. And I think that alone is likely to give us 2x our portfolio. I'm going to stick with that rigidly. But if that works, and then you go to the second one, which is commercial. Does it have a good strategy, product market fit? What about our portfolio? How will it engage in that? And then we have to believe in that. And if both of those are good, then we'll talk about structure. And if the deal's at wrong price, won't do it, right? And it's sort of that tends to be, I find a really good rubric to kind of pass through the opportunity set. And then you overlay, like, in terms of our thesis, institutional adoption. Anything that allows for bigger institutional adoption, I will invest in that all day long, because that's the big kahuna.
I confirm that rubric. That's what we do. But we're large numbers, right? We invest in a lot of companies, 42 in Q1. We then calmed down a bit because that was a lot. So we've been doing on average around, I think we have 26 right now in our cohorts. But what we do is we change our themes. So we decide we're going to do something different every quarter. So it gives us 3 to 4 new thesi a quarter. So that makes it really exciting. So for example, right now, just to give you a range, we're doing something with Polygon, we're doing something with Near, we're doing a zero knowledge proof thesis, and we're doing something with Walmart, KPMG. So, it's really, and that's around de-commerce, decentralized commerce, new term. And then in Q1, we've already announced we're going to do something on Bitcoin.
Did you say de-commerce?
Decentralized commerce.
You heard it here first.
There you go. Yeah.
Decom.
Put it in your article.
Yeah. You touched on zero knowledge proofs. I don't know if any of the other panelists have thoughts on it. I've covered it a lot at length this year, especially in the Ethereum ecosystem. Zero knowledge proofs allow you to scale layer 2 protocols to essentially give you very low fees, high throughput, which is very, very valuable to Ethereum. And they're already taking that technology across to Bitcoin, and they're looking at how they can use it to improve Bitcoin's processing capacity, essentially.
Not just on Bitcoin, though.
Yeah,
right?
yeah. Across the ecosystem, of course. A number of smart contract protocols. How important is investing in infrastructure like that? I mean, that's what's important, right?
Yeah.
You're trying to look for something that's actually giving value and a use case to the industry, right?
Yeah. So for us, infrastructure's been doing well for follow-on funding. So I think there's a real appetite for that. We do think, Bitcoin has been rallying, but also it seemed to coincide with us announcing that we're going to have a Bitcoin cohort. I don't know if they're related, I'm joking. But anyway, so look, we do think the infrastructure, again, has to do with the usability and being able to kind of go cross-chain and be able to kind of interact in a way that's usable. So yeah, doing well.
I also want to talk about managing your investments, because as a journalist, I've always been curious. You part ways with money. How active are you with the projects and companies that you part ways with your money to? Because if it's tens or hundreds of millions of dollars, surely you're going to be knocking on their door every week saying, "Hey, give me an update. What's happening here? This one's free for anyone to take."
I've got some of my founders here, so we stay in touch, definitely.
Yeah, we at InvestReady also, we tend to invest in not following the old VC rule of being close to your companies. Some of the companies we can travel for within the day, and we normally have a seat in the board of directors if they have one, and try to help them not only knocking to see how you're doing, but also how can we help.
Well, look, I think I ran a startup and it failed, right? Which everybody in the entrepreneurial game will tell you, if you haven't done that, you're not ready to invest, right? Like, you have to have gone through the pain, the scrap, and had at least one big failure before you can be really successful. And I think I know for a fact, like, I remember from my experience and other experiences, my board was actually quite engaged, but like, there's nothing worse than like disengaged investors. There's no value in money per se, right? Like, and if all you can do is get money for money's sake and there's no strategic value to it, I really think that's suboptimal on every level. So therefore, the implication has to be fewer investments, more activity, more engagement, active board participation or chair participation or advisorship. But the other thing that we're really important for us, which is where the name Deus X Machina Deus Ex comes from, which I'm actually amazed no one's asked me yet in a month why we chose that. So you heard it here first. It's this idea of spirit through the machine. So all of the elements of our portfolio should be working with each other. Like, we can't look at it as a portfolio of singular investments. They all have to engage to get the greater than the sum of the parts. So there's not only active with a portfolio company, but looking left and right to all the other ways in which we can sort of lift the ecosystem view. That's our 2 cents.
Maybe you can just touch on Angel Block, because obviously it's decentralized, right? People have the ability to invest through it. I mean, how do they? I
love the fact that you started this question with, you said you're saying figures and it's usually tens of millions of dollars. I'm like, yeah, I can totally talk about that with these guys. hundreds. No, but I think my experience, I'd rather take the angel route here, because I like to be hands-on with my investments, and I like to help. I've had many advisory roles, and advisory is another really weird thing in crypto. Like, 99% of advisors are zero value add, which is really weird. And I've had one advisory gig where I felt like I was zero value add, not because I didn't do anything, but because nothing that I brought to the table was actually utilized. And I think there's a lot of parallels when it comes to investing. If you're in crypto, if you've been through, a bear, a bull cycle, so that's probably going to be like 4 years, people, especially if you stick around through a bear. You meet some of the best people when you stick around through a bear. So you have contacts, you have a network. And when it comes to investing, even if it's a smaller check, it doesn't matter if it's 50K or if it's 50 million. If you have value to add, but the project is not willing to use that value, whether it's a contact or maybe it's a biz dev opportunity, that's one of my red flags. And that's usually when I kind of take a back seat. That's why I'm like, okay, like your network's big enough, you've done enough where you don't need to meet this investor. Or I had that happen actually last year during a bear, where a company I invested in, actually, they just ghosted one of my payments contacts, which I still have from when I was running a centralized exchange. And it's a really good you don't want to burn that contact. But when something like that happens is usually when I know I'm taking a back seat and I don't have high expectations for it.
If you allow me to add, though, there is always a flip side, not to this adding value to your investee, which is the willingness of the founder to listen. And I found through years in the industry that one of the biggest lies in the startup ecosystem in general is we want smart money. And I'd say it's a big lie, because 6 out of every 10, they don't really want to listen. So I pledge people to kind of think wisely what is really that you're looking for in your investor. And are you willing to listen for something maybe that you don't want, you're not going to agree? Or how do you actively listen or actively challenge? I don't want dumb entrepreneurs who say yes to everything I say, but active listening is sometimes missing a little bit.
Yaroslav, you look like you're about to add something.
Yeah, but we as a venture studio, we naturally own big parts in the company, so we just can't disengage. But on the founder investor side, what is really common is that founders are not actively engaged in trying to extract value from the investor. So very often you as an investor or as advisor need actually to ping them all the time. Hey, how can I help you? I can make an introduction here and there and things like that. So that's something we try to educate founders on, so that if you have some context, some intro, you should utilize it like within 24 hours and double down on that and just ask the investors whenever you need help. So this is education actually, because a lot of people just are not used. They don't know how to ask for advice, how to ask for help, because they think if they call their investor or write an email and ask for help, the investor will think that they are not capable of doing these things themselves, and they're afraid of like creating that bad image. So, but this could be tackled and educated.
But it's we're talking a lot of what we're talking about now. I feel it really strongly pertains to equity type investments. I think it's a bit slower pace. You know, the exit isn't as clear, especially earlier on, because in this space, which is super highly liquid, doesn't sleep, I think one of the best things an investor can do is, when it comes to value add, is not dumping tokens, and they can't even do that, and I know a lot of founders who are amazing founders, but it's exactly what you say, Yaroslav, where they don't want to reach out because it's like, no, they're already dumping tokens. What kind of value add can I have? Because they already showed that,
That's why you need to have good SAFTs and vesting protocols.
Of
so
course,
that
but
you
it's just
don't
how
have
the
such
space is,
investors.
right?
Yeah, I was just going to move on to that. I mean, ICOs in 2017 were all the rage, and Alex, you touched on it earlier. Some of them raised tens of millions of dollars, and they never came out with a working product, right? And just sorry to the investors, but these people either ran away with their money, or they weren't able to come out with something that's working. In the last 2 years, you as investors, have you been focused on investing or building companies that have a working product or a business model that looks good? What's the most important thing? I mean, does there need to be a working product or business model? Is it worth the risk if it's not actually there and something tangible is already on the table? Yaroslav?
For a token launch, you mean?
Yeah.
Yeah. There haven't been a lot of token launches, so I think we've been waiting for them a little bit. I think they're going to look a lot more like crowdfunding, to be honest, in the traditional world, where you need to show your investors the same thing that you would be showing institutional investors. I'm not sure what it's going to look like going forward, if I'm honest. We have a token launch advisory. We do this for our more advanced companies that are going to launch their tokens. And I'm waiting to see the space. I think it's going to look a lot different. It won't be a smart contract and idea and a launch and like, hey, come take this ride with me. I think everyone's a little savvier, which is, again, I'm going to go back. We're more professional. It's a professionalization of this industry.
Well, let's face it, 2017 was a goat rodeo of just nonsense, right? Like the amount of money that went up in smoke. This is frightening, that's no way to do this. Like, let's all be sensible, right? And the tautology I find in this token space is like, I'm such a believer in all of these new tools, and I'm a believer in that route to raise capital, but I'm massively skeptical about anybody who wants to launch a token. And the bar, as far as I'm concerned, so I want to, by the way, I really like structures that have equity in tokens, because then you're really talking about building a real business. Anything that's tokens only, I think I'm kind of calling it from here on in no interest, probably. But if you've got a real business model, this goes back to your point, like there's got to be something real. Like the fact that we went through this period where a white paper was sufficient is just like, in retrospect, it's like, well, it's no wonder what happened. Like, what were we expecting? You can't. That's no way to do it. Like, there's got to be traction. There's got to be a realism. But I think I'm excited about the new wave of really strong token projects that will succeed, because I suspect there's ways of leveraging that as a capital raising mechanism that we haven't really harnessed yet. But I think it becomes more institutional. I think you're right.
Yeah, there's a lot of work to be done in the token world, right? And I feel like with Angel Block, we're adding our 2 cents to it. But it's exactly as you said, Tim. But there are projects where there's not going to be equity, right? Because it's for example, Swiss Foundation, it's an L1, right? And the token is you either like the token or you don't like the token, right?
Yeah, I'm going to agree with you. You shouldn't say no to everybody just because they're token owners.
Don't say no to me just yet.
Yeah,
We'll talk after. Oh, sorry. Just one more thing. When it comes to tokens, and you mentioned the ICO boom, there's one really important thing, even if you have a token, because a lot of projects, I'm not calling anyone out here because I think it comes with the territory and the space, is sometimes I'm talking with people and it seems like they confuse a token with a business model, and they start thinking like the token is the business model. So everything is going to be great if you launch in a bull market and token is going up. But what's the company doing when it's a bear and things start going south, right? I think that's one of the most important things, because if you tie all of your expectations with a company with token going up, like the music's going to stop, and what happens then? So is there an actual business model, right? A lot of times fee generation is an amazing tool to look at. We had, during on-chain summer, there was a really interesting project called Unibot, and at its height, they were doing as much fee generation, I think it was per 7 days for all of summer, as GMX, right? Which is huge decentralized perpetuals exchange. So that obviously really, really interests me, because if you can launch in a month and you can do that kind of volume, you can generate that many fees, like it's pretty easy to verify your valuation, right? So business model is like
Everything.
Having a token is not enough.
Yeah, I'm going to second that totally. I think the token model is broken. It's completely broken for 99% of the tokens that have been launched, where whether there was or wasn't a real purpose in the company, like Tim said, the company has to make sense. Even if the company has had sense, people would launch tokens with bear no relationship with what the company was doing. And what they call tokenomics, you like a project, and so you're all excited, and then you go quickly to the token economics page, to see, okay, how is this gonna come up? And then you realize that the token economics is just a chart that shows who's gonna get the tokens when, which, excuse me, but has nothing to do with token economics. There is no connection between how the company creates money and how the token attracts this money or captures this value, as you were saying. So this, guys, needs to be fixed, because it's not there for the large majority of the tokens. And people continue to see launching of tokens a way to fundraise, which is okay, and it's very interesting. And I hope that we can figure it out, because it would be a true revolution in the fundraising process, and we're all looking forward. But please fix the token economics, and it's not there.
Because that's actually something that happened, like I totally agree with you, because that's something that happened, I think in around 2018, where I remember for all the bad that happened with the ICO boom, back in 2017, when you said token economics, it meant something different than it does now. And I remember I asked for the token economics a few years back, and they sent me total supply and the vesting schedule. I'm like, whoa, this is not what we're talking about. So it used to mean what it should mean, but the switch happened a few years ago, and it seems like not everybody, but a lot of people are on board, and it's very confusing.
Yaroslav.
Yes, doubling down on what Ignacio said is that in 2017 and 18, tokens were primarily used in investment vehicle. It was not integrated into the economy as well, and a lot of projects didn't have any business model behind. But what I want to say also on this topic is I think we will have it once again, at least once again, this hysteria around investing into whatever seems to bring value, short-term value, because when markets start booming, the common sense just leaves the room completely, and there is no way to fight that actually. And I think what legit projects should do, and that's one of the most important roles, I guess, of venture studios, accelerators, and incubators in the space, venture builders in the space, is to filter these kind of teams and these types of projects, so that when not the retail money, but some institutional, some venture, large venture money comes, it comes to the legit projects with legit business model, tokenomics, if there is token integrated into the business model and having sense. But I think we will see 2017, 2021 at least once again, and maybe even in bigger scale, because the whole scale will be huge.
We've only got about 2 minutes left. I don't know if there are any questions from the crowd. I just want to gauge it very quickly. We've got one hand up there, 2 hands. I'm going to just jump down quickly and go to you. Please keep it brief, 2 minutes. Was it you? There we go.
Yeah, hi. Very good panel. I think this is the best panel here today. So very, very good. Short question. Short question for.
Well done, guys.
Yeah. Short question. So, do you see anything change from 2020, 2021? In regards to how the tokens are launched, because I don't see that, and why so many VC funds are like backing still the projects that are like launching right now. You see you see Sui, you see all these projects Aptos with very, very bad tokenomics in my view. Why are so many VC funds are still like putting money into that? And one more thing, do you agree that VC funds are coming in to exit, or is it not fair what I said? Thank you.
With Sui and Aptos, it's because the VCs are not, there's always like a public round. And what's most important to remember is VCs are not investing in the round that you're investing in, right? And that was the case with Solana. That was the case with a lot of these L1s that are predominantly based in the US. Then there is some Cayman or offshore entity that is the token issuer, right? So it's all about the valuations. I think everyone wants a piece of the L1 pie, and everybody wants to pick their horse. And especially with everything that happened in the last bull market, if you guys were here, if you remember, like the multiples on Avalanche, the crazy multiples on Solana, and I just think that not to talk down about VCs, because again, VCs are like regulations. Like we talk VCs like there's one VC or the same group of VCs investing in everything. It's the same as talking about regulations. We talk about crypto regulations like there isn't, 100,
options.
Various different jurisdictions that are interested in crypto, right? So nuance.
Can I offer the short answer to the question why? Easy money. That's why.
I'm trying to offer nuance, like I just mentioned.
Sure.
No, but it's true, because again, a lot of VCs, they look at what did well. I'm a hammer. I see a nail. That's what I know how to do. If that did well, maybe it's going to do well again, and that's why you're still seeing a lot of VCs are actually late on trends, right? Like I think we can agree on that. Like that's
It's called FOMO.
Yeah, exactly. So, what's going to be the next big narrative? And I can promise you, whatever the next big narrative of 2024 is, you're going to see 2027 bear market investments by VCs in that narrative.
Yeah, there you have it. I think it goes without saying that most VCs have invested in a pre-seed that you are not aware of, and they're going to make a lot more money than you are, unfortunately. I think this has been an absolutely fantastic panel. Thank you very much for all your insights. You guys are very discerning, and clearly you know what you're doing with your money. Thank you very much.
Fantastic. Thank you so much, Gareth.